Sound check, everybody. Can you guys hear me? Sound check. Can you guys hear me? If you guys can hear me, at least say, click a like and say hello to me. Yeah, and it's quite a rush job, but let's do it. Okay, I think it's necessary for me to come online right now. Hello, yes. Hi, Joyce, family, tune in, Harping, baby. Yes, thank you. Okay, can hear. Wow, just loud and clear. Just make sure it's loud and clear. Okay, maybe I should put a camera here before it distracts everybody. How about this? I don't think it make a difference. All right, good. Good evening, everybody. All right, cool. Okay. Wait. I'm in. This side is a cafe, and this side is like a little departmental store. So thank you, Res. Wait, first to give a like. Thank you. I really appreciate everybody giving a like. Okay. Uh, I didn't intend to give a. I didn't intend to give a talk, but the market reacted in quite a way that I thought is necessary for me to come and give a talk to calm some nerves. Okay. Uh, yes. Like Liao. Thank you. Cool. Yeah. Investors not worried. Speculators should be worried. Yeah. Good. And Andy, you have learned well. Okay. Yes. Okay. I stayed up and listened to the entire Federal Reserve Chairman talk yesterday. Okay. As I listened to his talk and things like that, it sounds like almost a photocopy of the previous few versions. So nothing new, nothing unanticipated, nothing shocking. I think the market must be crazy to think that you will expect anything different. Okay, anticipated almost everything he said. Yeah, and I already told you guys. First of all, I anticipated that he will increase the interest rate by 0.5%. That has come to pass, right? I said that he will remain hawkish and say that yeah, I'll continue to whack the market, whack the market, whack the market. Didn't I say that? It's all anticipated, okay? And the market still have a shock, and today market crash, right? So I thought, no one to calm some nerves, right? So I think as a finance educator, my responsibility is to provide what I think is the right investment strategy. But in between, there will be incidents and events that cause people to stray away from the journey. So I thought in times like this, it's important for me to come out and give everybody my perspective. And before everybody do something, stupid or things like that, and sell and I mean, I cannot say that. Before anything, do something emotional. Yeah, okay, and that you might do regret later. So I think it's important for me to come to stay help people. Stay the course. Yes. So I think that's the right thing to do. Okay. So if you guys are ready, the slides are there today. I remember to put the description there. Okay. All right. Let's talk about it quickly. I know it's almost 12 o'clock, but it took me some time to take a look. So today my talk will be separated into two parts. Number one is let's take a look at what happened yesterday and why the stock market crashed. But more importantly, I saw a potential black swan. I saw a potential black swan that came, and I need to highlight that that is a lot more scarier than what Jerome Powell can do. So I think that one I better highlight first, and that will come in the second part of my talk. Which first part I talk 10-15 minutes, second part 10 minutes. So I think within half an hour we can end it. Okay. So everybody, please give a like. Okay, I'll start. Okay. So the title of my talk today is the Federal Reserve Chairman, or the Federal Reserve has crashed the market again. Emphasis on the word again. This is my 248th talk, and and I have to use the usual disclaimer that this is not meant to be a stock market advice telling you to buy or sell. It's meant for education and entertainment. Okay, cool. So So while I've announced that it was a good news for stock market, the stock market unfortunately has crashed. Okay, And that's largely because the Federal Reserve Chairman has came out and basically this part of it, which is the Fed raised the rate by 0.5%, is fully anticipated. Fully anticipated. What is not so anticipated by the market, not by Mr. Lu, Mr. Lu already said it will happen, is that the signal more likely increase and the entire conversation is very hawkish. Okay. What is interesting, and many people have may not have seen that. Wait, my slides are stuck. Okay, is that most of the Federal Reserve official or they call the FOMC participants actually have penned down a forecast of what we call the Fed rate will be, and they actually has brought that up to 5%. So right now it's about 4.25 to 4.5. They believe that it will end at 5.1%, and that basically crashed the whole market. Okay, because previously they were anticipating a number like 4.6%. I'll talk about that. So, which basically means that from where we are, we're likely to see one or two more rounds of Fed funds increase by about zero point 0.5 to 0.75. Now, I'm not so worried about the stock market impact of this because the inflation rate come down. Those people who are crazy about property market, you better watch it. This one will come and bite you very, very painfully. Okay, and those people are bidding for the T bills in a few days' time, and those people are looking for a higher fixed D. I think it's time to come to realization that it's going to go up. So it's a good thing. Right? It's a good thing for savers. Okay. So really, the key thing is that the Fed hike rates again and one or more rises, but the more rises has an end to it. They're looking at 5.1%. Okay, so they basically took a tough stance on rates, and they are prepared to take whatever it costs, the pain it costs the economy. They will have it suffer. So so in the summary of economic projection called the SEP, the U.S. central banker now said that the policy rate right now in the 4.25 to 4.5% will increase, most likely increase to 5.1%, up from the 4.6%. Now, all these are economic jargon, and let me just put it clearly. They previously think that, after this round, they'll probably increase by another 0.5% or so. Now, or less than that, now they're going to increase it by to 5.1%. So that sent a shock wave down the entire market. Okay, um, and basically, the Federal Reserve Chairman kind of acknowledged that the last 2 months the inflation rate has fallen, but you know, just basically say these two data point only, go to hell. Yeah, basically that's what he said, all right, in a figurative way. He basically say, the falling interest rate, bopake, I will continue to whack. Now, so basically he acknowledges that, oh, that's a good sign, but not enough. I want to see a confirmation. So basically, he wants to send the whole stock market, not wrong, send the whole economy. Now, his aim is not stock market. He wants to send the whole economy into pessimism. Okay? And we already anticipated that. I said that before. Right? He cannot change that message. His rhetoric cannot change. If he creates optimism, what will happen? People will go and buy. Buy. People will ask for more wage increase and things like that. Then, it will have the counter effect, right? So, I don't know why Wall Street cannot see that, but that is anticipated until cannot anticipate it already, and they still have a shock, right? So, now, yesterday was the shock wasn't in the interest rate. The shock was this thing called the Summary of Economic Projection, SEP, which came out before Federal Reserve Chairman spoke. And basically, in the Summary of Economic Projection, they revised the Fed fund rate from 4.6% to 5.1%. And and it's that actually send a shockwave. Now, I'm not too the single one thing the Federal Reserve Chairman keeps saying is this: there are three components of the CPI, the cost inflation. Number one, goods and services. Number two, uh, goods and service goods. Okay, goods. Number two, mainly housing. Okay, three is wages. So the first one he acknowledges goods. The second is about housing. He said, okay lah. I try not to I try not to buy that, but I cannot avoid that because all the data are showing there's a lag effect. So housing will come down. I buy that, okay, I let it go. The third one is wages. Wages still high. Job market still painful. So he said, you know, I'm not gonna let that go. Basically, he's telling the workers stop asking for a pay rise. I will make sure I'll create an economic environment that make you stop asking for pay rise. That is basically what he's saying. Okay, I will whack the entire economy, the demand jalat jalat. Okay, SBJL. Okay, yeah, he will whack the economy until it becomes SBJL. You know what's SBJL? Anybody? SBJL. One small prize for anybody who can guess what's SBJL. Okay. Basically, SBJL means Sibei Jalat. Yes. Right? Yes. Okay. Sibei Jalat. Yeah, Sibei Jalat. Right. Oh, what? Oh no. Wow. So Sibei Jalat until whack so hard until everyone will fall on your knees and thank your employer for giving you a job. That's basically what he's saying. Okay? I will whack and whack and whack and whack. I don't damn care. I don't, I almost want to use some F word, but I don't damn care what all the goods inflation rate coming down whatsoever, as long as you workers ask for pay rise, I will hit you until you fall on your knees and thank your employer for giving you a job. That's basically what he's saying. Okay? Yeah. Okay. So so that's essentially what happened, and the whole market go into a frenzy today. Yesterday didn't even go to frenzy. Today went into a frenzy. And just said, wow, jala jala la, see ya. I'm telling everybody all these are anticipated shock. We know that he will say that. The the fall in the inflation is 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 going to happen, barring one black swan event. I'm going to talk about it in a short while. So I don't see it. There is nothing surprising. Okay, I still maintain my stand. There's a lot of people say, "Hey, Mr. Lu, you said good news, good news. How come the stock market come down?" Well, I will just say this. Okay, it's a inflation coming down is a good news. The re the yeah yeah okay. Hello. Yes, my friends are Singapore. Yeah. Okay. Yes. Everybody say hello. Okay. Grazie. Okay. All right. Cool. I've got a very warm. Now I've got a. Okay. Arrivederci. No problem. No problem. Yeah. Thank you. Thank you. I don't know them. I don't know them. Yes, some random angmo. Yeah. Yeah. So some. I don't know them. Yes, I don't know. I don't know them. it's it's unusual, but it's very common in Angmo country. They are very warm and nice. That was so funny. Okay, so where was I? I totally got distracted by the Angmo. Um, video bomb. Okay, so all these anticipated. Don't be surprised. The market will go into a reaction. You know, in a short while, everybody get used to it. As long as the inflation keep coming down, that's okay. And the inflation will come down. Okay, will come down. All the signs are leading it. except this one black swan that is flapping right now. And what's a black swan? Anybody? Don't look at the slides, huh? Don't look at the slides. What's a black swan? So yesterday, in the Federal Reserve Q&A, yeah, okay, you're right. Okay, Carl, you're right. In the Federal Reserve Q&A, someone asked this question, which many of you have asked me before. Okay, so China opening, is it good or bad for the world? Okay, so because China opening will cause opening in the long run will cause supply, to improve because we expect a lot of people can go back to work. The factory open. Apple can start producing iPhone. Mr. Lu and me can buy our iPhones already and things like that. But China reopening will also cause a huge spike in the demand, and as a result, inflation can go up also. So someone asked Jerome Powell, is that good or bad for for inflation? So he actually said, I'm not sure myself. So if the most smartest man on earth called Jerome Powell also not sure. So Mr. Lu also might to think that I know what to do. Okay. So he actually said that he acknowledges that supply chain will improve, but inflation can spike because of increase in demand. He himself is not sure. But what is actually happening in China now? All of you all should go and watch those Douyin and Kuaishou and all this. They have a lot of videos on it. It's not even showing much on YouTube, not showing much on news article, but a lot of Chinese are posting up what's happening in Beijing and some of the Chinese streets right now. Do you know what's happening in China right now? Anybody? Okay, what's happening in China right now? Everybody say, I want freedom, I want freedom, I want freedom. They almost riot now until the Chinese government now, TL, okay, and basically say, you want opening, Lim Pei open the market all for you. Open. Guess what happened now? Guess what happened now? The whole China is exploding with infection. So jialat that there is no rule stopping anybody from going out. The whole streets of Beijing is like a ghost town, worse than the lockdown period right now, exactly right now. So there are not a lot of news articles on it, quite interestingly. But if you look for Kuaishou and Douyin, they have a lot of news. China Beijing record spike in COVID cases. Daily life disrupted as street left empty. It's completely a ghost town right now in China. The malls are empty. The streets are empty. The train stations are empty. People are avoiding. And it's not because the government is locking them down. The government said, 你要去,你去吧. Open, go ahead. Suddenly, right now, everybody get infected. They call it 阳性, 阳性 means positive. There's this many videos, thousands of videos right now. This guy sits in his office and he points to an empty office. He says, this chair, this colleague, 阳性, 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 阳性. 阳性 means positive. Positive, 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 positive. It's a massive outbreak. Massive outbreak right now. Okay. The pharmacies are overcrowded, the streets are deserted, and the hospitals are super crowded, super crowded. A lot of people, clinics whatsoever. This thing now happen in Singapore, no big deal. I mean, how many of you have kena, how many of you have kena COVID before? Say me, or not me if you haven't kena. I think 70%, 70% of you, 70% of you has kena already. Okay, yeah, looks like about 60-70% kena. Yeah, more than that, 80%. Okay, those who still haven't kena, you haven't got a badge of honor, no? Yeah, I think I kena twice or three times already. Kena until no big deal. Jab four times and this. I kena jab four times also. Yeah. Okay. So no big deal. Now it's like a flu already. You know, 大惊小怪, it's a Chinese there, in some sense. So right now the government don't have enough, okay, don't have enough. Those who are, Henry said, those who not kena are antisocial. Okay, I'm not going to say that. My daughter Emily is pretty introverted. She also kena. Cannot avoid, man. How to avoid? Yeah. Okay. How many of you are kena 2 times? Okay, and above. How many of you kena 2 times? Say me, me, me. I just want to check. Okay. How many of you kena 2 times? Okay. Just curious. How many of you kena 2 times? Jim kena. Only one person only. Oh, Joshi. Okay. Me. Wow. So, do you when you kena a second time, it was easier, right? Was it easier for you? Uh, was it easier? Shamin also a chairman. Sorry. Okay. So that he knew. Yeah. Okay. So 2 times. Okay. So my point is this: China right now is going through a huge outbreak. Okay. What I fear, this, remember, I always say, right? Inflation is going to come down, barring black swan events. Yeah. Okay. Barring black swan event, this could be a black swan event. Okay. This could be a black swan event. Let's analyze how black swan event. China have a massive outbreak. Massive outbreak. A lot of people cannot go to work. A lot of people cannot go to factory and produce things and whatsoever. There's a lot of logistic companies right now, but no enough staff to deliver. The Kuwaiti are those logistics now, got no people to deliver. So as a result, guess what happened? The world factory in China now suddenly being crushed. This can be the black swan event that will kill it will will cause more inflation. Not Jerome Powell and his thing. That one not so scary because that one is he hanging. This one is a real problem. The 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 unfortunate thing is that is basic. The Chinese are programmed to think that the Chinese are programmed to think that COVID is a damn serious thing. It's like those ghosts come as zombie, I don't know, just that kind of thing. The Chinese government hung them non-stop. Now, your friend got COVID, so okay, no, but rest in the house 3 to 7 days. No big deal. But there, different story. They kena COVID, now, is like, they kena COVID now, is like maybe cannot go to work for 6 months, 8 months, that kind of thought. Then it's programmed by the government to think very seriously. So here we kena COVID, no big deal. There they kena COVID, like I want to die, must go hospital, that kind of thing, right? Now other people who die, other people are seriously, of course. A lot of the elderly didn't get a good vaccination, right? So the hit will be quite high. So this one can be a black swan event. Let's watch this closely, okay? Let's watch this closely. This can be more jalat now than the interest rate hanging by Jerome Powell. This one needs a deserve watch. Now, if this caused the whole stock market to crash, don't be surprised. But brace for impact if this were to happen. Okay, if this were to happen. But one good thing is this: we all know, because Singapore has gone through it, the whole world has gone through it, that in 2 to 3 months, when this whole wave is over, China will come out of it stronger. Okay? China will come out stronger, and in some sense, they don't need to lock down anymore. What we are not sure is when they become stronger and open up, and the whole Chinese go out and shop the world, what will happen to the world? Okay, that part we don't know. So this part is the only black swan that we can see so far that is potentially an Achilles heel for inflation as a result for stock market. Okay, barring this happening, okay, barring this happening, all the other thing there's almost nothing to fear. Okay, nothing to fear. we have always anticipated a volatile recovery. I said it for 20 times or so, I don't know, 30 times. The volatile recovery will continue, okay, will continue as long as we stay on the course. I think we should be fine, right? Uh, yes, China should have been more prepared because they have all the time to prepare, right? They could have taken a chapter from Singapore. Right? We did. I mean, our government did so well. Yeah. Thank you, Stingray. Thank you. Yeah. Okay. So let me conclude by saying this: barring any black swan event, the inflation will continue to fall. Will. Okay. But the Federal Reserve Chairman will continue. The Federal Reserve, not just Chairman of the Reserve, will continue hawkish because to they need to maintain a pessimistic mood to bring down aggregate demand so that inflation will not spike. Okay, but the Federal Reserve eventually has to acknowledge that the fall in inflation is a confirmation. Okay, it's a confirmation. So therefore, the stock market will recover. I cannot tell you when. Can tell you will. Okay, and just ignore the volatility and stay calm. Okay, just ignore the volatility and stay calm. As long as you have a, you have take a broad-based index like S&P 500 or Nasdaq or equivalent, I think you will be in good shape in time to come. Okay, you got to stay calm, ignore the fluctuation, ignore the noise, ignore the fear mongers. There are lots of them. Okay, go on with your life. Those who want to go shopping, those who want to go tour, those who want to live your life, those who want to go fishing, go running, go live your life. You should not be watching this kind of thing day in, day out and frighten yourself. Okay? Cool? Now I finish my talk. There are more than half of you haven't given a like. I would really appreciate you all if you give a like. Hopefully you appreciate me bringing this message to calm nerves, don't kanchong, and everything will be okay in the long run. Okay? So I'll take some questions right now, shall I? Okay, shall we? Is it good time to start DCA in S&P 500? Start now. DCA simply means that you can start anytime, okay, by definition, right? Because DCA says that you should buy at any point of time, just keep buying, keep buying, keep buying. If China comes to a standstill, whole Asia will follow, okay? Got to learn through this period. I'm not too sure whether the whole Asia will follow. Okay. Yes. So can buy today? No, I cannot tell whether you should buy or cannot buy. But if you have a long term time horizon, I think it's okay. Uh, but I like to buy more crashes. Supposing if the black swan were to hit again, it crashed to 3,800 points, 3,700 points, then I might think about going into the market again to cash this time. Do you think the Fed is trying to break some pivot? I don't think. I'm sure they are trying to do that. They are actually trying to break aggregate demand, right? So I don't think. I know. Yes. How this will impact on property investors? The interest rate will continue to rise for sure. It will rise and rise and rise and rise and it should have some impact on property. Yes. I'm in a cafe right now. This side is cafe and this side is shopping center. Oh, so some background noise. I think my earpiece. Give me a minute. Is the noise cancellation over? Is it okay right now? Okay. Okay, Liao. So sorry. Okay. iPhone. All right. Cool. Okay. Thanks for letting me know. All right. Cool. Okay. So any other comments and questions? All right. Yes. So stay calm. There's nothing nothing to be overly concerned about. Okay. Our investment strategy has always been, invest in the long run. Scusa. Okay. and just let it ride. How do I find the Dow Jones index? I don't like the Dow Jones index. Yeah. Okay. I don't really like the Dow Jones index. I like to be I like to take I like to take a more conservative stand and invest in something that is proven over the last 100 years. What if the stock market crash due to QE and stock just corrected fair value and take years to recover? That was not the case in 1980s to 1982. Uh, this current experience have happened before in 1980, 1982. I'm taking a chapter from there. Is it is it possible that that we don't follow 1980 to 92? Of course, right? It's of course. Then what do we bet on, right? So I'm taking the cue that 1980 to 1982 exactly the same thing has happened. You know, then therefore I am taking a cue that it should follow a similar trend. Okay. So on this note, you're right. T-bills, how much you bid for? How many of you are going to, last one they settled at 4.4%. Now that the Fed has went up by 0.5%, what is the rate that everybody is bid for? I'm definitely going in this time. Okay. I want to take a consensus. I want to take a consensus view. How many of sorry, okay. How many of you are gonna okay, so P say is gonna bid at 4.5%. Anyone else? 4.4, okay. Yes. 4.1. So low. Okay. 5%, 4.8, 4.8, 4.5. I'm personally, to be frank with you, I'm quite happy that to settle at 4.4, 4.5. Okay, 3.99. Wow, it's spoil market. I'm thinking, please don't spoil market. At least 4.2 to 4.5. I would say this is the range. I thought long you guys don't spoil market. Okay, yes. I think 4. USD now 4.75. Yeah, that's called low baller. Yes, I agree. Unless there's a crisis, I won't take gold or silver. Singapore stocks doesn't compound. Yeah, everybody use Singapore stocks for dividends only, and dividend stocks is also so bad right now. So I wouldn't. I wouldn't be. I'm never optimistic on Singapore stocks. Some people are like. Some people make money from Singapore stocks. I'm not a big believer. Uh, Okay, so I haven't unloaded a single cent onto T-bills yet because the first time I missed it. No, it's the first time I didn't get. Second time I missed it. This round I'm gonna go for the queue, man. Okay, yeah. So so clearly the interest rate has went up. Singapore will have to respond. Have to respond. Okay, have to respond. So once it respond, then inflation rate will not inflation rate, then our T-bills have to respond. You get allocated to who if you lowball. I see. Hmm. Wait, let me ask you. At this part, I don't know. If I bid for 4%, if I put $100,000, I bid for 4%. If they close at 4.5, do I get 4 or do I get 4.5? Uh, that part I'm not very sure. Anybody? I get 4.5. I see. So everybody will lowball. Very jalan like that. Yeah. So please don't lowball. Please don't freaking lowball. You lowball, you bring everybody have the attitude, everybody bring down. That's exactly how the mechanics work. They want everybody lowball. TMD, man. Yeah. Spoil market. Yeah. Spoil market. Yeah. Please don't lowball. Okay? Yes, please don't lowball. I keep on. Can everybody please give a like? Walao. You don't give a like, this video cannot go on. Yes. Mr. Lu 4.5%, everybody lowball 4.49. Then I missed it. Yes. The Nash equilibrium is a low ball. Yeah, that's game theory. You're absolutely right. Yeah. Okay. All right. Good. Okay. All right. Good. Okay. So I hope that what I've shared, okay, is something that set everybody's heart at ease. Just uh, Just stay the course. Okay, I'm in Milan right now. Yes, yeah. Okay, good. Uh, it's really so hard to get them to click a like. You know, it's even harder to tell everybody to go stay. Yeah. Uh, yes. Okay. So I say again, everybody don't chow car and low ball. 4%, if not 4.5%. Last time it started at 4.5%. The Federal Reserve have increased by 0.5%. Now it should be 4.9, man. Okay, so it's, let's say it's not 4.9%, at least 4.5, 4.6, 4.7. Okay, yes, there's a lot of petty thief here. I already kena 3 times already. Okay, cool. All right, good. Okay, thanks for watching this live stream. Okay, I hope it's useful for you. Okay, and just stay calm and let's watch the whole market. Okay. Yes. Thank you. Hi, Amy. All right. Okay. Good night, everybody. Okay. I hope you guys will will appreciate what I've shared and stay the course. Okay. What am I doing in Milan? It's my work here, man. Yeah. I'm back to office. Yes. Okay. Rather, my wife's work. Yeah. My own work is another work. Yes. All right, good. Okay, good night, everybody. Really appreciate this time. Okay, Annie, Justine, Jason, Amy. Okay, yes, Henry. Good night to all of you. Okay, yes. Good night. Before you go, can you all give a like? Okay, when you finish, give a like. Okay. Thank you. Thank you. Thank you, Annie, Ryan. Thank you. Okay. Thank you.